Hello everyone, in today's video we're going to discuss what kind of home you can afford depending on how much you're making. And as I'm based in Tokyo, all the data is going to be from Japan, but the principles apply for wherever you are living. So if you are in the US, if you're in India, or if you're in Europe, this applies to you, so stay tuned. I have selected 3 different salary ranges, starting with the median income of 4.2 million yen, 7 million yen, and 15 million yen. The variable and fixed interest rate have been rising steadily in Japan, and so has the property price, making it very complicated. Rent as well has been increasing by as much as 10% for family units, and the average rent in Japan is now $1,200, making it very challenging. We're going to be discussing both renting and buying a house. So if you're interested in the buying part, I leave a link down below for you to go directly to that part. But we're going to start with renting first. The rule usually with renting is that you should not spend more than 30% of your gross income on renting. So going back to our 3 salary range, if you are making 4.2 million yen, you're getting 350k a month, giving you a maximum rent of 105,000 yen a month. If you're making 7 million yen, you're getting 583k a month, so give you a maximum rent of 175,000 yen a month. And if you are making 50 million yen, your maximum rent should be 375,000 yen a month. This was set so that you have enough money to cover your living expenses. The caveat is it doesn't take into account how much debt you may have or how much utilities you have to pay every month. And adding to that, you also have other costs when you consider renting. For example, there's also need to pay a deposit, maybe a guarantor, to pay a few months in advance. And in Japan, there's also something that's dreaded, that's called the key money. And key money is basically a gift to your landlord that you can never recover. It can be 1 or 2 months. So at the end of the day, you may have to cough up to 6 months of rent before you can even get in the door. So if you put the key money aside, that applies for everywhere you live in the world. And you may even be asked for proof of revenue, like 3 months worth of salary or a proof of employment. So there's a lot to consider before you even go into signing for your lease. So if you're on the median income and after paying tax, which is about 20% at that level, you're left with 280k. You have to pay your rent, and all that's left is 175,000 yen. And you still need to pay any debt you have, student debt, credit card debt, and think about putting money aside. Eventually, this is very tough at that salary level, and you probably cannot keep that 30% rule. Or you would have to live much further away, get a smaller place, find a roommate or special someone to share your rent. Now, if at that salary level you're able to keep that 30% rule, or you're making more money, permitting you to have that 30% rule, this is fantastic because that permits you to put money on the side, eventually to put a deposit on a house that you want to buy eventually, and that's what we're going to be talking about in the rest of this video. If you have learned something or interested about what comes next, it would be super useful if you could click the like button and make this video seen by more people. And why not subscribe while you're at it if you're interested in videos like this one about finance and Japan. Thank you so much. Let's talk about buying a home. Again, there are general rules when you consider buying a home. The 28 and 36 rule and the 30-33 rule. Let's start with the 28 and 36. So the 28 part of that rule mentions that your monthly mortgage payment should not be more than 28% of your monthly gross income. Let's go back to our examples. If you're making 7 million yen a year, you're getting 583k a month, giving you a maximum mortgage payment of 163,000 yen a month. If you are in the 4.2 million range, means that you're making 350k a month, your maximum mortgage payment should be 98,000 yen a month. And if you are making 15 million yen a year, your maximum mortgage should be 336,000 yen a month. The 36 part of that rule says that your monthly mortgage payment plus the repayment of all your debt, credit card debt, student loan, car loan, consumer loan, should not represent more than 36% of your monthly gross income. Actually, in Japan, the rule is a tiny bit different. If you are making less than 4 million yen a year, then you should not exceed 30%. If you are making more than 4 million yen a year, you can go up to 35% of your monthly gross income. Keep in mind that that part of the rule is actually only for the lender, i.e. your bank, to consider approving you for a loan. It doesn't technically mean that you can afford that house. Why is that? It's because it's not only your monthly mortgage payment, you have to take into account the insurance and the taxes and maybe a bit of maintenance on the house. And as we mentioned in a previous video that should be around here or there, all of this together, which is your monthly housing expense, should not be more than 30% of your monthly gross income if you wanted to put money on the side and repay your debt to have a better financial future. That being said, I completely understand that if you are living off of the median income in Japan or in the US and are living in a big city like Tokyo or New York or Los Angeles, keeping the 30% rule is almost impossible. And it was impossible for me. That's why this house is definitely not downtown, but far off the northern suburb of Tokyo. You have to adapt to your own personal situation, trying to keep as close to the rule as possible. To have a wider financial vision and understand whether or not you can afford a home, let's look at the 30-30-3 rule. The first 30 says that you should not spend more than 30% of your income on housing costs. And that includes mortgage, property tax, and insurance. And we're going to understand that the lower the interest rate, the larger the home you can afford. Let's look at the average home in the Tokyo area. It costs about 45 million yen for a house that is 97 square meters on a 100 square meter piece of land. And if you take the government insured flat 35 mortgage, here how much your monthly payment would be depending on your interest rate. So if you're at the bottom range of the interest rate at 1.8%, your monthly mortgage payment would be 117,000 yen a month as of May of this year. But that same house on the higher end of the spectrum at 3.3% would cost you 146,000 yen a month, which is a little bit of a difference already. Now, going back to our three salary ranges. If you're making 4.2 million yen a month, your maximum housing payment should be 105,000 yen a month. If you're making 7 million, that gives you a maximum housing payment of 174,900 yen a month. And if you're making 15 million yen a month, your maximum housing payment, everything included, should be 360,000 yen. This part of the rule gives you an idea of how much you should spend on your housing so you still have money left to continue living for your living expenses, putting money on the side for your retirement, repaying debt, and generally having a stronger financial position. That being said, if you're living in Manhattan, downtown Tokyo, or downtown London, you probably cannot keep that 30% and you might be closer to 40% or 45%. And that would be the reality. In that case, you need to be really good at keeping tab on all your expenses so you don't tip over financially speaking and you're still able to putting money on the side or repaying your debts. At the end of the day, it's a very personal situation and you should run your numbers and don't try to mimic what others are doing. With rising inflation, rising property price and interest rate, it's becoming more and more difficult to afford a home for younger generations. And if salaries don't increase and if more homes are not made available, it's going to be almost impossible to afford a home in your 20s or 30s. And this guy here had to wait until he was in his 40s to afford this home. I was late to the game, but honestly, for the younger generation, I think it's really difficult. And we are starting to see people trying to live further away from big city centers or just leaving big city centers and going to what used to be called second tier or third tier cities. It happened in the US with the places like Denver, Colorado, Phoenix, Arizona, Austin 10 years ago, and now they are very bustling cities, and we are seeing more and more cities picking up afterwards. And I see that in Japan, people living further away from downtown Tokyo, 90 minutes each way, 2 hours away from Tokyo to be able to afford a home, and that's really tough. The second 30 of our rule says that you should have 30% of the purchase price of the house set aside in cash, 20% for the down payment and 10% for all the costs related to purchasing the house, like the closing costs. In Japan, you can get the flat 35 mortgage by putting just 10% of down payment, but you would pay more interest rate, so 20% is still recommended. In the US, if you can't put 20%, you're gonna have eventually to pay a private mortgage insurance, or PMI, that kind of protects the lender, but that's going to be extra cost you have to pay every month with your mortgage. So it's better to stick to the 20% down payment to lower your monthly mortgage repayments. However, I understand that in this day and age, it might sometimes be completely impossible to have 20% down, and you're gonna have to put 10 or just 50% down to secure a house given your personal situation. With the current market situation that I just mentioned, with the salaries not increasing fast enough, property price going up, and interest rate going up at the same time with inflation, it's gonna take time to have enough money on the side for a 20% down payment. If you think you're gonna reach your 20% down payment goal in the next few months, do not invest it in the market, do not risk it. You can just put it in a savings account, and especially in the US or Europe now, the interest rate on savings accounts are quite up, so that's quite nice. Just put it there for like 6 or 12 months if that's your basically objective. If you're in Japan, the saving rate on the Japanese yen deposit is so little that you don't have to worry, you just leave it there and leave it sit there for the next few months. Now, if you think it's going to take you 5 years, 10 years or more to reach your 20% down payment objective, then you can consider investing that money on the stock market to make it grow. That being said, the stock market doesn't always go up, and there might be a risk for a downturn. So you have to know that. So at the end of the day, it's a very personal decision what you do with that money that you're putting aside for your 20% down payment, but that gives you a couple of options depending on your time frame. The last part of our rule, the 3, says that you should not spend more than 3 times your annual income in the purchase price of your house. So if you are at the lower end of our salary range of 4.2 million yen, it means that you should not spend more than 12.6 million yen for purchasing a house. And when we look at the larger Tokyo area and the average price is 45 million yen, it's just completely impossible. If we go a bit further in the Chiba prefecture on the eastern side, the average cost is 32 million yen, which would represent between 9 to 13 times your annual income. Except if you're going for an abandoned IKEA house, but that's a story for another video. So the solution would be to live further away from Tokyo or in a completely different prefecture, much further away, but then the salaries tend to be lower, so it becomes a catch-22 situation. If we follow this 3x rule, in Tokyo, you need to make at least 15 million yen a year to be able to afford this 45 million yen home, and that means that you would be just in the higher up of 15% of the Japanese population, putting a lot of people completely out of range of being able to purchasing a home. And if you're trying to do that in New York City, for example, you can see again, you would have to make a lot more money than the median income. So basically this 3x rule is almost impossible to follow in this day and age. So if you're able to follow the 30-33 rule when purchasing a house, congratulations, you're really mastering the financial game and you're on your path to a very bright future, I believe. Honestly, having 30% of the purchase price of a house on hand in cash or abiding by the 3x your annual income for the purchase price of a house is really, really tough. Only the 30% of your monthly income in housing costs seems possible to me, except if you're living in a high cost of living area like New York, London, Los Angeles or Tokyo, that's going to be probably way over 30%, closer to 40, sometimes 50%, making it really, really tough. Whether you're renting or buying a home, a lot is going to be depending on how much money you are making, where you're living, what's your personal financial situation, and whether or not you're putting money with a partner or a spouse. And honestly, for some people, it might be close to impossible to have the down payment put together to be ever able to purchase a house, except maybe if they have a financial windfall through the lottery or inheritance. I hope that was useful to help you understand how much house you can afford, whether you're buying or renting based on your income. And do not hesitate to let me know your thoughts in the comments down below. And don't forget to like and subscribe for more videos to come, like this one where I explain how I bought this house with a mortgage with all the calculations. Please watch it just after this one. Thank you again, and until next time, goodbye.